Every forex strategy out there hinges on the fact that we buy support and we sell resistance. It is a common information that this goes everywhere. Every strategy talks about market structure because this is the foundation of trading the financial market. But in today's video, I will explain something deeper in my bid to make you understand what it takes to trade. If you are new to the channel, please smash the subscribe button and the notification button. Turn on the bell icon so that I can get more information like this. Sit tight and let's learn. To understand market structure, we must first of all deduce the word market and structure. Of course, we're in the financial market, the forex market. Now, that covers the word market, and structure simply means how something is being held, how something interacts, and the technicality that makes that thing valid. So when going together market structure, this means the market structure at that current time. What are those formations or what are those current status that makes the market what it is? There is a bearish market, a bullish market. Now, in my previous video, I've tried to cite these definitions. Today, we'll go a little bit deeper and trying to understand what market structure is. Take note, market structure is regarded as the current price movement defining how we interact with the market. I kept this really simple so you can understand properly what it means. And if you see clearly, you see it is subdivided into three distinct parts, which are uptrends, downtrend, and consolidation. An uptrend is a market that is forming a series of higher highs and higher lows, and I'll give you graphical illustration to understand. Take this, an uptrend is a market price that is forming series of higher highs and higher lows. Okay, let me change this. Let me make it a little bit bolder so you can see properly. An uptrend is a market price that is forming series of higher highs and higher lows, constantly breaking structure to the up. That is how to notice an uptrend. It is constantly pushing itself to the top, making series of higher highs and higher lows. Like it is written here, this is a this is a graphical illustration of when the market is creating a bullish trend. In this case, an uptrend, because we understand that a bullish trend is a trend that is pushing to the upside, while a bearish trend is a trend that is pushing to the downside. When the market consistently prints bullish trend, it is regarded as what? An uptrend. And how do you know an uptrend? It creates series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. This part is called a higher high. H, we abbreviate it by writing HH. This is also called an higher high. While this part is called a higher low. A higher low, which we abbreviate by writing the word HL. Same goes for this part. HL. How and why are we calling it higher high and higher low? If you notice at this junction, price came to this point, then retraced a bit. Remember, I gave the definition of retracement in our previous videos. This was why I laid a perfect foundation as to how and what these words mean. Price gave push to the upside. Now, this sharp retracement is called a higher low because even in the structure of high and low, there is a point that is highest and there's a point that is lowest. According to this current market movement, this is the highest point and it is regarded as a higher high. Coming down, pushing down, creating this bearish momentum, this became the lowest point pattern. This is now regarded as higher low. Notice that price broke structure again, When you hear the word break of structure, it means price broke the previous high or the previous low. Now price broke this low, creating another higher high, pushing to the down, creating a low that is now lower than this previous high. This is called higher low. Price consistently doing this, we regard it as an uptrend. Then for a downtrend, this is a process when price is creating series of lower lows and lower highs, consistently breaking structure to the downside. Now this is it. A break of structure. A break of structure. This part is identified as low. Why this part is called a lower low, which we abbreviate using LL. Same goes for this part. It is called a lower low. Notice that price was creating a bearish structure, and what we understand by bearish means the price was consistently pushing to the downside. Price came down, retraced to the top, break structure to the down, did it again continuously. Now it is known as a break of structure, like I said in the past, because it broke a previous low. In this case, this was the low, and it is abbreviated and by using the words lower high, because this is the highest point of the low. That is why it is called lower high. Then a lower low, because at this point this became a lower point because it is lower than the previous low and the previous high. Price pushing to the top again, it is now called a lower high because at this point it is higher than the previous low. When price consistently do this, it is regarded as a downtrend. Take note, this is the lower low, this is a lower high, because this is the highest point of this low, this is the lowest point of this high. When price consistently does this, it is regarded as a downtrend. Now for the last on our list, which is called consolidation, picture a boss. Picture this boss mentally. When price moves around a zone, a specific zone, creating a series of higher highs, higher lows, lower highs, consistently within a range, it is regarded as consolidation because price is unable to break out of that zone with a valid push or a valid direction. To understand the market and to understand how to engage it, we must first of all come with a directional bias in mind. And this directional bias is either an uptrend, a downtrend, or a consolidation. It is highly recommended that you stay off a consolidated zone because price does not give accurate data. You can either be in a buy or a sell, automatically making that position not valid because price is not breaking structure either to the upside or to the downside. And I will experience this using the chart. This is the 2-hour analysis of GBP CHF, Great British Pound, and the Swiss franc. Understand that, like I was saying, this is a downtrend. And how do we identify it? You see, this was the top. Let's start here. Price came here, lower low, went up, not breaking this previous high. Then price came down again, another lower low and a lower high. Then price came down again, creating another lower low and a new lower high. Then you notice that price came down again. This series of movement is called a bearish movement or a downtrend. And in downtrend, we are only looking for sells. In a downtrend, we are only looking for sales, and in a buy trend, we are only looking for buys. We understand that graphically, this is the first information that we absorb, and it is with this information that we now undergo series of trade. Price first of all created this bearish movement known as a downtrend. Now, when we understand this directional bias, we start looking for sales in the market. Now we look for a way, another point in the market to explain an uptrend. Now, this is a graphical illustration of an uptrend. Notice that price came to this point, the price came down, price pushed up again, price came down, price pushed up again, price came down, then creating this overall bullish momentum. This kind of price action is called a bullish price action, and in such scenario we are only looking for buys. I hope you get this information and I hope you understand. You notice that when price came, broke structure, created a higher high, then a higher low, then a higher high, then a higher low, another higher high, another higher low. Around this zone we can only look for buys. Notice that when price came to this region again, price bought to the upside. Price bought to the upside. Now this is what it means to understand directional bias or market structure. Now when you hear the word market structure shift, let me write it down for you. Shift. This means that price has changed its direction, either from an uptrend to a downtrend or from a downtrend to an uptrend. This is a graphical explanation. Let's say price was printing to the up. We are hopeful that when price gets here, it will come down again, not breaking this previous higher low. But when price now breaks it, comes up again, then breaks it to the down, this point in the market is now called or regarded as a market structure shift because price did not respect its previous structure. We understand that this was a higher low, then a higher high, and a higher low, and a higher high, and a higher low, and a higher high, consistently printing to the upside. The moment price broke through this previous higher low, it created a new lower low. Then price came up again, not breaking past this previous higher high. Notice that price came here and broke through this structure again, and broke through this point again. This now became a new lower high. This whole part, like I circled, is now regarded as a market structure shift, and it can also happen on a bearish market. Let's say price was breaking structure to the downside consistently, creating series of lower lows and lower highs. Then all of a sudden price comes to this point, now breaking past the previous lower high. Then price came down a bit and broke structure again. This point is regarded as a market structure shift, and the moment market shift its directional bias, as traders we are to be in line with that directional bias. Instead of us looking for sales, we start looking for buys, because price has shifted from its previous bearish momentum. This was a bearish momentum, another bearish momentum here. Price has now shifted towards a bullish momentum, consistently now breaking structure to the top. Now, it is only wise that at this point your approach to the market changes because price action has changed. In our next video, I will try to explain and indulge on how to navigate these and understand the basics of market structure. In this video, we will call this market structure part 1. Stay in line and stay tuned for next video so you understand and comprehend properly what market structure is and how to engage it. Thank you for watching this far. Please smash the subscribe button, smash the notification button, like this and share to your audience so we can have more views and grow together. Thank you so much. God bless.